Charlie Munger, How to Get Rich or Invest During a Recession. Charles Thomas Munger is an American businessman, billionaire, investor, and philanthropist. He is the vice chairman of Berkshire Hathaway, the investment firm led by Warren Buffett. Munger is known for his value investing approach and has been a business partner of Buffett for over 60 years. In addition to his work at Berkshire Hathaway, Munger has served on the board of directors of several companies, including the Daily Journal Corporation, where he is currently chairman. He is also a noted philanthropist and has made significant donations to a variety of causes, including education, healthcare, and scientific research. Charlie Munger compares the current market situation to the 1970s, when the Federal Reserve took measures to combat high inflation, even if it meant causing a recession. In an interview with the Daily Journal in Los Angeles about the impending recession, Munger reports, "Well, when Volcker, after the 70s, took the prime rate to 20% and the government was paying 15% on its government bonds, that was a terrible recession. It lasted a long time, caused a lot of anger and agony, and I certainly hope we're not going there again." Charlie Munger. He applauds the actions of Paul A. Volcker, a president of the Federal Reserve Bank of New York that assumed the position in August of 1975. Paul Volcker prioritized the reduction of inflation and made it clear to the public that the decision to raise interest rates was based on market forces, not the actions of the Federal Reserve Board. One of his first actions in office was to increase the discount rate by 0.5%. In addition to managing inflation, Volcker also paid attention to the debt crisis facing developing countries and supported the growth of the International Monetary Fund's Reserve Fund. Charlie Munger continues by saying, "I think the conditions that allowed Volcker to do that without any interference from the politicians were very unusual, and I think in 2020 hindsight, it was a good thing that he did it. I would not predict that our modern politicians will be as willing to permit a new Volcker to get that tough with the economy and bring on that kind of recession. So I think the new troubles are likely to be different from the old troubles. You may wish you had a Volcker-style recession instead of what you're going to get. The troubles that come to us could be worse than what Volcker was dealing with, and harder to fix." Charlie Munger. Munger wonders if the Federal Reserve has a sufficient political support to implement necessary monetary policies to reduce inflation. Senators Elizabeth Warren and Bernie Sanders have criticized the Federal Reserve Chairman Powell for the financial difficulties caused by the rapid, significant interest rate increases. Powell has stated that he wants to see a decline in the asset bubbles in real estate and stocks and an increase in unemployment to control inflation. Jerome Powell describes the current situation the United States is facing when he said, "These are unfortunate costs of reducing inflation, but a failure to restore price stability would mean for a greater pain." The 2023 recession. It is highly likely that the U.S. will experience a recession in 2023 due to several factors, including high interest rates, high bond yields, high inflation, increasing layoffs, and declining corporate sales and profits. These issues contribute to a decrease in discretionary spending by consumers, which can lead to a chain reaction in the economy. As consumers prioritize their basic needs, such as energy bills, food, and housing, the velocity of money slows and less is available for discretionary spending. High labor costs, rising costs of goods and materials, and energy expenses can lead to reduced profits for corporations, leaving them with less money for capital expenditure and company growth. The recent GDP and job data also indicate a high recession probability. Does everyone lose during inflation? The short answer to this question is no. Inflation can have both winners and losers. Some people may benefit from it, particularly if they have assets that increase in value faster than the rate of inflation. For instance, if you own a house and the value of the real estate is rising faster than the rate of inflation, you may become richer in terms of purchasing power of your house. Similarly, if you have a fixed rate mortgage and the rate of inflation is higher than the interest rate on your mortgage, you may end up paying back the loan in inflated dollars that are worth less than the original loan. This can also make you richer in real terms. However, others may be hurt by the inflation. If you have a lot of savings in a bank account, the purchasing power of those savings may decline over time if the rate of your interest is earning is lower than the rate of the inflation. Similarly, if you have a lot of debt, The real value of that debt may increase if the rate of inflation is higher than the interest rate on the debt. In this case, you may end up paying back more in real terms than you originally borrowed. Best Investment Practices to Beat 2023's Recession by Charlie Munger. During a recession, consumer staple items such as food and cleaning supplies tend to sell well. This is because, in times of economic downturn or high inflation, people prioritize their basic needs like food, shelter, transportation, utilities, and insurance before turning to larger discretionary purchases like appliances, cars, or home improvements. People may also shift from eating at restaurants to buying groceries and cooking at home. Realizing the secret to maintaining financial stability drags us back to the basics. You should invest in industries that provide basic human necessities and those that are unaffected by a recession. Here are the benefits you stand to gain by investing in these industries, as advised by the billionaire Charlie Munger. Number 1. Insurance. Insurance is a financial product that helps protect individuals and businesses from financial loss due to unexpected events, such as accidents, illnesses, natural disasters, or property damage. Insurance can provide stability and security during a recession, as it can help protect against financial setbacks that may be more likely to occur during these troubling times. Insurance can help cover your medical expenses or protect your home and belongings if you lose your job during a recession. For businesses, insurance can help mitigate the financial impact of unexpected events, such as disruptions to operations or damage to property. Number 2. Transportation. Investing in transportation can potentially help beat inflation in a few ways. One is by providing a service that is in high demand, which can allow the company to increase prices to keep up with inflation. Furthermore, if the company is able to increase productivity and efficiency, it may be able to offset some of the impact of rising costs. Finally, transportation companies may also be able to hedge against inflation by investing in assets that are expected to appreciate in value over time, such as real estate or infrastructure. Number 3. Real estate. The third item on the list is real estate. Investing in real estate can potentially help beat inflation in a few ways. One is by providing a physical asset that has the potential to appreciate in value over time. This can be especially true if the property is located in an area with strong economic growth or if there is a limited supply of available land or buildings. Also, real estate can produce income through rental payments, and these payments may be able to increase over time to keep up with inflation. Finally, real estate can also provide some protection against inflation by providing a place to live or do business that is not subject to the fluctuations of the stock market or other financial markets. In addition to insurance, transportation, and real estate, other business ventures you can invest in to beat inflation are utilities and food. Next, I'll briefly explain the concept of stagflation, which is the portmanteau of words stagnation and inflation. So, what is stagflation? Stagflation, which occurs when a country experiences persistent high inflation combined with high unemployment and stagnant demand, can be particularly challenging. During a recession, businesses may see a decrease in revenue, but their expenses may remain high, leading to reduced profit margins. This can impact even grocery stores and dollar stores, whose small profit margins may be further eroded by high labor costs and the rising cost of products. So, in conclusion, Charlie Munger's portfolio is built with companies that are able to withstand economic pressures, such as Berkshire Hathaway, Costco, and Chinese stocks. Berkshire Hathaway owns several companies that sell essential goods and has some pricing power, and its primary business is insurance, which is considered to be recession-proof. Berkshire also uses its cash flow from the insurance business to invest in value stocks or purchase whole businesses during bear markets. Costco, which offers low prices on a wide range of products, generates profits primarily from membership fees, although it can raise fees as needed. Munger's Chinese stocks represent a bet on the fast-growing Chinese economy, although recent political tensions in the US have affected their performance. Munger's apartment houses provide a hedge against inflation, as real estate investments tend to appreciate or at least keep pace with inflation, and rentals are typically stable during a recession as people still need somewhere to live. Overall, Munger's portfolio includes 3 out of 5 solid investments in the short term, and he has achieved long-term success as a billionaire investor. Investors may benefit from learning from his principles for success. Let us know in the comments your thoughts about the industries Charlie Munger recommends for investments during the 2023's recession. If you enjoyed watching this video, don't forget to smash the like button, subscribe, and turn on post notifications to get early access to economic and financial news.